you remit to KRA. PAYE is a tax chargeable on employment income of over 24,000 shillings per month. In this week's edition of Tax 101, our reporter Caroline Njenga details us more about the pay-as-you-earn tax. Take a look.
Pay-as-you-earn, commonly referred to as PAYE, is the mandatory tax levied on all employees' gross income of over 24,000 shillings per month. In Kenya, the government manages the PAYE tax through the Kenya Revenue Authority, KRA, which collects the statutory contributions from the employer on salaries and wages paid to employees. This income tax applies to all employees, permanent, temporary, full-time and part-time, except for those whose employment period is not longer than a month. PAYE applies to wages, salaries, commissions, allowances, fees, bonuses and any other income for which an employee earns for services provided to an employer. It is the employer's statutory duty to deduct PAYE from the salaries or wages of the employees.
Then come the end of the year, the employer will be able to see how much tax was deducted from the given employee, and the employer will be able to issue a tax deduction card to the given employees as the evidence that the employer deducted the tax from you.
The normal pay year runs from 1st January to 31st December, but it is filed and remitted monthly by the employer. The law requires that payee returns be filed and tax paid on or before the 9th of the following month. Pay-as-you-earn follows the progressive taxation system where higher incomes are taxed more than lower incomes, as Kenya Revenue Authority Tax Manager Wanja Wangondu explains. In addition, individual tax bands and rates vary between 10% and 30%.
Let's assume you earn 100,000. So we take this 100,000 and remove, from the 100,000 we take the first 24,000, multiply by 10%. That gives us 2,400. Now from our total, which is 100,000, we less 24,000. That will give us allowed 76,000. Then the next 8,333, we tax it at 25%. And then now, we take now the whole, so it was 100, we less 24, and now we have less 8,333. The balance will be of about 67,667. That one now we tax at 30% to give us the tax payable. So you'll notice that for somebody who is earning allowed 100,000, the tax that they will end up paying in a given year, in a given month, will be totaling to close to allowed 20,000.
Currently, the government has the leeway to adjust the tax rate or band subject to Parliament's approval. Payee returns are submitted online via iTax. If you have no payee to declare, you are required to submit a nil return. If there is a shortfall between how much tax was paid and how much was actually due, the taxpayer will have to make up the difference once they file their annual tax return. Late filing of returns attracts penalty of 25% of the tax due or 10,000 shillings, whichever is higher. The payee tax rate in Kenya vary. However, many Kenyans out there do not know how to calculate their monthly payee. But with technology, Kenya Revenue Authority has unveiled the payee calculator that helps you determine how much your employer has deducted from your salary. Caroline Njenga for Business Insights.